Well, good afternoon, everybody. This is Mike, your host for Insider Secrets. I don't know if you saw this morning, but I did a post on LinkedIn and on Facebook, and it talked about thinking differently. And I think that if we don't start to think differently in our lives, that we get stale and we get stagnant. We don't move forward. Well, today, my Core Intentions wants to bring a guest forward that thinks differently and thinks outside of the box. Our intention at My Core Intentions with our clients is to help them and educate them, to teach them and help them grow, to learn to be more disciplined in their investing, in their strategies, and how to create short-term cash flow and long-term wealth. If you're looking for some direction, if you're looking for some help and some guidance, how to build a stronger plan, how to execute better, and how to live a balanced lifestyle, give us a call. There's only a couple of weeks left before our 3-day virtual event, the Multifamily Global Summit. I hope that you've reserved your seat. I hope that you're going to be there. And if you haven't, go today and reserve your seat. Make sure you've signed up and bring a guest. You won't want to miss any of this event. Actually, our guest today will be a panelist on that event as well. I'm excited about our guest today. I'm joined by my friend and real estate investor, Alina, and she is the founding and managing partner of Samo Financial, a boutique private equity firm that helps a select group of people passively invest in commercial real estate. For over 6 years, she has been an equity partner in various multifamily private placements nationwide. Her business model has been articulated through Warren Buffett's philosophy that someone is sitting in the shade today because someone planted a tree a long time ago. Her passion is to teach others how to build wealth. Alina is the founder of 2 meetup groups. We will talk to her about these groups. One is educational webinars and collaboration for various administrators and self-directed IRA companies. Her topics revolve around aspects of getting started, investing in real estate, particularly in syndications and the use of using funds from 401ks or self-directed retirement. And this will probably be some great conversation today because I don't know that we've really talked about self-directed retirement funds on the show here. Here's something that's pretty interesting about Alina is that her clients and her have acquired 1,200 apartment doors. They have a couple of different funds that they're involved with, $10 million fund that's focused around self-storage and a $10 million fund that's focused around mobile home parks. Let me get her to start to talk about her strategy and her focus. Let's see if we can get some inside secrets as to how she operates and what she does. Alina, good morning. And what I'd like you to do is say hi to our guests today. And in one word, describe for us you and your investing strategy, if you would.
Mike, thank you. First of all, I want to thank you. I don't think I ever had such an impressive introduction. You made it sound so incredibly great that I want to be friends with myself.
That's good.
Thank you so much. Thank you so much. I would say our strategy, one word would be transparency. We are transparent in anything and everything we do and anything and everything that happens. I think transparency makes things a lot easier because when we tell people like it is, they know what to expect. We tell them about the risks involved. We tell them that the strategy we propose is not set in stone. We tell them this is just proposal. Don't expect that this is going to be the case. We want to do good or make it even better, but there are risks involved. And just like there are risks involved in Wall Street investing, there are risks involved in real estate investing. And I want people to be fully aware and be knowledgeable and educated about those guests and not coming into syndications thinking that, hey, this is a guarantee that I will definitely get it. Yes, we want to make it happen, but be aware that things happen. And I mean, who knew that COVID would happen?
Right.
So that's
right. That's going back to saying who knew 2001 or 2008 was going to happen either.
Exactly.
Right?
Exactly. Yeah.
So here, I really like your tree analogy, right? Because I've heard it said that there's 2 good times in your life to plant a tree, right? The first one was 20 years ago, and the second one is today. So
Right.
hopefully we'll give some listeners some good information today that'll help them decide to plant a tree, or at least start to water the one maybe that they've planted a while ago. I really liked the things that I was talking about in your introduction, and we've had some conversations and gotten to know each other a little bit. But what I'd like you to do is share with our listeners here today, what your backstory is. How did you wind up getting involved in real estate? And were you born a real estate investor, or was it something that you transpired over the years?
Sure, sure. No, of course, everyone is natural born real estate investor. It comes from day one. Yeah, I wish. Thank you, Mike. Again, thanks for the introduction and thanks for having me on your show. I'm excited about the show and very excited about the upcoming summit. And I strongly encourage others, everyone who listens to the show, to join us and bring their friends and family to the summit and participate and digest all the knowledge from all the phenomenal speakers that are going to be on the summit. I started my journey, my professional journey rather, many years ago, after I graduated with degree in accounting, simply because I thought that, hey, I'm good with numbers, then accounting should be a good profession for me. Well, turned out it wasn't the case. I never liked accounting, even when I was painfully taking all those 9 courses in college. And after working in public accounting and then private tax accounting for a little while, I realized that I had to run away from tax accounting and find something a little bit more enjoyable for myself personally. So I switched to the information technology world, where I work till this day. And the roles have been different, but they mainly have been around being a liaison between the business world and technology world. So I've been always kind of the connector between the two, helping them to communicate, helping them to work together, and helping them to move forward in the right direction. And while working, I've been obviously looking at the tax returns for my husband and I, and seeing that while we were progressing in our career, we were also we've been hit with more and more taxes, including the alternative minimum tax. And I've been thinking about real estate because of that, because it's one of the best strategies to lower your tax burden. So I've been thinking about that for a long time, until about 7 years ago, when I finally decided that I have to take action. We have to start investing, because we need to find a way to lower taxes. And so I did. I started researching, have looked for investments locally in tri-state area, New York, New Jersey, Connecticut. Wasn't able to find anything viable for us. And then I decided to go out of state. And as an out of state strategy, syndications came across my desk. And I started reading about it and realized that this was a viable option for someone like myself. My husband and I were working full time. I have a family. So this seemed like it would be a strategy where I wouldn't be involved much. And we would only have to research the offering up front and then invest and do nothing after that. It seemed perfect. So after doing the additional research on a specific operator and their offering, I finally took action and we invested in one. And after the first one, there was this trickle down effect where there was a second one, third, and so forth. And then just went on and on. And then after doing that for a while, and realizing all the benefits, not only the tax benefit where, when you do make money, but you get taxed at the capital gain tax level, not at the ordinary income level, which is a huge difference for high earners. And plus you're getting that residual income through syndications. I realized that this is a great way to diversify out of Wall Street, not only for me personal, but for a lot of folks like myself. No one in my immediate surrounding, and believe me, because I'm in New Jersey, I have a lot of friends that are in financial services. I have a lot of people that are in IT, very educated people that know a lot, but no one knew or heard about syndication. So I decided that I needed to bring it to the folks and help others to also generate that passive income and diversify their portfolio and be able to lower their taxes by investing in real estate. Because many people won't invest into real estate but they don't want to deal with tenants and toilets.
Yeah, right.
And I don't blame them, right? It's not a fun part,
That's
but
why
being able,
self-storage is so good.
yeah, excellent point. True, true, very, very true. Yeah, mobile home park only solves half of that problem, right? There are no
Right.
toilets if they're tenant owned. But you're right, storage comes in pretty handy with that. But anyway, with the storage, you still have to manage. You still have to spend the time on your investment. You have to be involved more and more at the beginning, not later on after 5 to 7 years. But at the beginning, you have to be engaged. But anyway, this was a great way for folks that have busy families, have either businesses or hobbies or work full time or whatever else, just don't want to be engaged. It was a great way to invest in real estate and still continue with whatever they were continuing in their lives. And that's how Samo Financial was born. And I started Samo Financial with that purpose, to plant that tree 20 years ago. And I mean, at this point, it's only 2.5 years, but I'm sure it's going to be more down the road.
Right.
But I planted the tree to make sure that 20 years later, people will have the tree and will have the bench to sit in the shade under that tree. And so that's
Nice.
my purpose.
That's about leaving that legacy, you know, that's a good mission and a good value, you know, that's what I like about you.
Thank you, Mike.
You know, I'm gonna kind of just go off script here a little bit, and
Of course.
you know, here we are, right, Q3 of 2020, and talk about a couple of advantages. You know, you referred to tax advantages a lot, but tell our listeners, you know, especially maybe somebody who might be listening today who is not a real estate investor yet, who's thinking about putting their toe in the water, who's just maybe going to get started or brand new. Give some idea to them of a one or two tax advantages and why it's beneficial.
Sure. So, and again, being a former tax professional, I have an advantage because I understand that tax is a little better, and that was one of the things that I've looked upon when I was looking at real estate, or when I look at other things as well, including Wall Street. For me, because both my husband and I have 401ks, IRAs, and everything is obviously in Wall Street, the stocks, bonds, mutual funds, I wanted to find a way to diversify. So that was the expectation number one. The expectation number two, I wanted that investment be a little bit more tax advantageous than Wall Street, because Wall Street is taxed at your ordinary income rate. And if you are in a higher tax bracket, that's a killer. I mean, it can kill 30 to 38% of your taxes upfront. You know, I didn't want that. With syndications, you have an advantage. And again, I don't want to go into details of bore people, but you're not taxed on that rate completely, because, you know, number one, a lot of the syndications do value adds, and value adds upfront generate losses. So you may not even be taxed on syndications upfront in the first few years, and that's great. And when you do get taxed, everything is broken down into several categories, which are taxed at a different rate. And that's what makes it stand out, and that's what makes it different from Wall Street investment.
Okay, great. Thank you. So what was the first real estate investment you were involved with?
The first one was a syndication of apartment complex. I don't remember how many units, but it was roughly around 100 units in Georgia. It was a C to C plus area, and it was a C minus asset. So the operator had to do a pretty heavy value add. I'm still invested in that syndication. It's doing fantastic. It's phenomenal. But obviously, because it's been so many years, at this point, it's stabilized. So at this point, it's just producing residual income for us, and the dividends keep coming every quarter.
You know, residual income is good. I mean, two key factors that I love to teach are, you know, how do we create short-term cash flow? You know, just money that comes in, right? That passive money. And how do we create long-term wealth? So while appreciation happens over time, that property goes up in value, you'll capitalize on the back end, but along the way, you get to go to dinner or take another vacation.
Absolutely, absolutely. Or another point that I like is compound interest. You know, you generate that income, don't let it sit. Move it into an investment account and let it generate compound interest. If you're not active trader, just put it into some investment fund that's following the indexes and have it generate compound interest that way.
And that's that diversification piece, right?
Yep,
So if we
exactly.
have it here, we put it here. You know, a lot of times we can get too heavy in one asset class, but why real estate is so impactful is because it's an alternative, right?
Exactly, exactly. And that's what I like about real estate, because again, from day one, like, and I can speak for myself personally because my undergrad's in accounting, my MBA is in finance. So I've gone through 2 business schools in my life, and never in my life in either of the schools I have ever heard about syndications. All we've talked about is stock market. It's always stock market. So all I knew from getting that education in both business schools was stocks, bonds, mutual funds. No one ever mentioned that, hey, you can invest in real estate, gold, oil, and other things. And I think these are the fundamentals. I think people need to know about these things from the get-go when they're getting educated, especially when they're getting business school education. And that's why I'm a strong proponent of putting that educational components into the system, even into high school system, not even in college, but the earlier we can start sharing that information with the kids, the better they're going to be, because it will open up a lot more opportunities for them.
Yeah, you know, unfortunately, some of these things we've never been taught in high school or college, right?
Yep.
They don't teach you syndications. They don't teach you real estate investing.
Not at all. Yeah, I agree.
I remember, I don't know, Zig Ziglar, motivational speaker, right, for years and years, used to always talk about the education system and how they should be teaching money management and investing to kids in grammar school.
Yep.
Even, you know, way back early on, right? And I know he was a real advocate for that. So let's talk a little bit about the self-directing aspect of the retirement fund, right? So, you know, I'm sure a lot of our listeners might have 401ks or IRAs or, you know, but what about the self-directed venue?
Sure. And again, when I speak about these things, I speak from my own personal experience because I've gone through it, whether myself or I took my husband's fund and have taken through it. Again, I wanted to have a better diversified portfolio outside of Wall Street. And when I learned about ways to diversify outside of Wall Street with self-directed funds, I immediately took action. So for someone who has a business, and people don't know about this, they can open a solo 401k and contribute, I don't remember the exact number, it's either $53,000 or $63,000 per year, but again, don't quote me on a number, it's pretty high. They can contribute on an annual basis significant amount of money to that account from the income they're generating and start investing into real estate or other alternatives. I mean, where in the world will you find another such great opportunity where pre-tax money can be contributed and invested from day one? So that's one. And then the self-directed IRAs also give advantage to people that maybe don't have their businesses, but have the funds in their IRA account and just don't know where to put it, don't want to put it back into stock market. They can easily put it into the syndications and invest in real estate, and then diversify further within real estate. It doesn't have to be apartment complex. So like we said earlier, it could be storages, it could be mobile home park units, offices, assisted living, warehouses. There are tons and tons of different assets. So sky is the limit when it comes to diversifying your portfolio within real estate itself.
So I know that you are involved in and invest in and help others invest in different asset classes, mobile home parks, self-storage, multifamily. Do you have one that you really like more than another asset class?
I don't. I don't. And the main reason is because my strategy is diversification. I want to have a well-balanced portfolio. To me, that's important. So when I find a good asset and a good strategy for that asset, when I know that in my estimation, the investment has a great potential, I take action. But in general, I try to take the assets that are slightly more conservative than others, and that's the main reason why I'm at this point, at least, I'm not interested in investing in the office space. I might be interested in going into, say, warehousing, because I think warehouses have a future. But otherwise, I try to look for the assets that can sustain the recession and that have the ability to live and stay on the bare minimum while we're going through recession, and then become a great assets afterward, but will offer that stability and will offer at the end a way to appreciate and value at the end, and that can be sold and make the money in the long term. I'm not looking for quick solutions. I know some people want to quickly maybe fix something and flip it, and it's just not my personal style. Everyone has their own preference, and nothing wrong with flipping. But I'm a long-term buy and hold investor, and I believe in long-term strategies where you're buying and holding it for a long time, even if it's forever, because that's the best way to generate that passive residual income, by stabilizing the property, making sure it's fully functional, however long it takes, and then have it produce that residual income for you for many years to come. Because that's, at that point, you don't really need to spend much time on it, and it becomes a well-oiled machine that works on its own.
Yeah. And that's, that's a couple of interesting points there. I like what you talked about being long-term. I remember when I first went into the syndication business and, opened a small private boutique investing firm, and I'd have a good friend. And, at that time, we were talking about real estate, and we were talking about private investing, and he was telling me about a deal that he was involved with, and I had never known this about him. He was involved in a couple of deals with one of the world's largest syndicators and REITs today. REIT is, the real estate investment trust funds.
Right.
And he said he had been in this deal for 27 years. And I thought, 27 years? My philosophy at that time was I was going to go in, do some value add, 5 to 7 years, dump out of the deal, right?
Yep.
Because we figured we'd take all the depreciation along the way and have this asset that we couldn't do anything with anymore. So get out of it, right?
Yep.
And when I heard that he was in this deal for 27 years, it gave me a whole different thought process about how to do this. So I really think, you've thought a lot of things through, and I think that's beneficial. And I hope that our listeners are listening to that, because it's not just one way of doing something. There's multiple ways of doing things, right?
Absolutely, absolutely. And the more the better. But I believe that education is the key. And even if someone thinks that they know everything, they should continue educating themselves, because you learn something new every day. And it doesn't have to be through books. You can learn through experiences, your own and someone else's experiences. You can learn through mistakes, again, your own and other people's mistakes. You can learn by listening to podcasts, listening to books, and just digesting what's going on around you, and not just look at real estate in silo. You have to look at the other components as to what's going on with the economy, politics, because everything is connected, and we have to put all of the pieces of puzzle together to make sure we're looking at the whole picture. Because real estate works well, but it doesn't work in silo. It's impacted, and maybe it's impacted more or less than other industries, but it is impacted nevertheless by everything that's going on around us.
Yeah, that's for sure. And, talk about things that impact things, right? So, I know early on in our conversation, we alluded to the fact, hey, nobody saw 2001 or 2008 coming. I don't think anybody saw COVID coming.
For sure, for sure.
So let's talk about that for a minute. Here we are again, Q3 of 2020. What do you see that's happened? What do you see is going to happen? I know nobody has a crystal ball, and there's a lot of projections out there, but what's your opinion?
Well, let's see. Let me get my crystal ball. Yeah. I agree with you. I think we have to be extra careful, and I think we have to evaluate the pros and cons. And I think before going into any investment, everyone have to make sure that they have the emergency fund set aside. And when looking at a particular investment, each investor has to realize that whatever they're putting in, there is a risk of losing that money. So by putting that investment in, they have to realize that they may lose the money altogether. They may make some money, but they may lose it. So going in with that assumption will help you make sure that you are making the right decision. And then once you have that set aside, then take your time, evaluate the offering, look at the market, look at the operator, and look what strategy operator is planning to implement. And if that strategy makes sense, if you think that the operator can take on the strategy, if they've done it before and they can implement it again, then definitely go for it. That's my way of thinking ahead.
Great. So I know you have a couple of meetup groups. If you know how what are they about? What do you talk about?
Sure. So I still have two meetup groups. The difference is one was in New Jersey where I live. The other one was in New York, which you can, by the way, see behind me. That's a view to Brooklyn Heights. Now, thank you. Now it's all virtual. We connect all online through Zoom, of course, and I bring the speakers. And while the meetups are called The Power of Passive Investing through real estate, one was New York, one was New Jersey, we talk about various topics. They don't have to be just syndications. We talk about not only real estate, but for instance, I try to bring speakers that are relevant to my audience. So at the beginning of each year, I bring coaches that help us talk about setting up goals. We did that this year as well. I also just recently had a meetup where we had a less stress coach. She was talking about, excuse me, she was talking about the topic, sorry. We had this, she was talking about the topic that's on mind for a lot of people, which is stress. Everyone is getting stressed these days. So she was giving few exercises that people can do to control and manage that stress. And I thought it was phenomenal. So I tried to bring the speakers that are relevant to the audience that joining me, so they can bring value and people can benefit and can educate themselves and do something with their lives after listening to a speaker who hopefully has impacted their life in one way or the other.
Yeah, good. What would you tell your younger self today about real estate investing and what to look out for or what to look for?
I would say start investing as early as possible. Start educating yourself as early as possible. Know your limitations. Surround yourself by the people that have skills that are complementary to you. Bring value to other people in whatever area you have knowledge and you're the subject matter expert, and always try to give first before asking for anything. Just give, and things will come your way down the road.
Awesome. Thanks for that. What advice, do you have any other advice or any hidden secrets that you'd give a new investor?
I always tell them to never stop educating themselves. Always continue educating yourself and learning as much as possible about whatever real estate investing niche you chose, and concentrate on that niche. And if someone has a challenge of selecting that real estate investing niche, I actually offer my training that I've put together recently. It's specifically on that topic of how to select the best real estate investing niche for yourself. And I can share it with your speakers if they're interested.
I think that's awesome, and that's one of the things where I think I see some synergy between us is I really believe education is important. And not only education, but then the execution and who's keeping you accountable, right?
Absolutely.
So we can get overeducated, we can know all the things in the world, but until we start to execute, until we start to give away what we learn, we kind of don't move forward. We tend to stay flat or back up, right?
I couldn't agree more, Mike.
Say it again.
I couldn't agree more.
Yeah. So I like what you said in the beginning, you know, transparency, be transparent and get the education that you need. Hey, if you don't know how to do something, ask. One of my philosophies, and it's always been this way with my employees and anybody I've ever worked with, my coaching clients, is I say, hey, if you don't know, ask. There's never a dumb question, you know. It's just like when we both started our meetup groups. Everybody started at group number one, right? At meeting number one,
Yep.
and now there's hundreds of meetings down the road. So
Exactly. Exactly.
we all have to start somewhere, and that's how we all grow. And hopefully we grow together.
Yeah, the important piece is not wait till it gets perfect. The important piece is, like you said, start somewhere. Once you start, it's not going to be perfect. It's actually going to be very far from perfect. But the more you do it, the more repetitions you have, the more experience you gain, and the better you become, and the more you can value you can offer to other people. That's the natural progression.
And I appreciate you bringing up the multifamily global summit that's coming up in a couple of weeks, right?
Yeah.
And what I want to say is education. We're going to have 20 speakers talking about small to large multifamily deals. We're going to have speakers talking about syndications. We're going to have asset protection attorneys. We're going to have the legal aspects, syndication attorneys, attorneys to help you put paperwork together. So if you are trying to get educated in some area, this isn't just one vision, but we're having some of the best named speakers on the circuit that are going to speak and talk and provide information.
Amazing.
What I'd like you to do is, would you please tell our listeners how they can get a hold of you if they have interest in talking to you or hearing about any deals that you have going right now?
Sure. Your listeners can find me on my website, which is samofinancial.com, or through social media handles, whether it's LinkedIn, Facebook, or Instagram.
Great. And we will make sure that your information is on our YouTube page along with when this airs. So
thank you.
I appreciate your time today. I know that weekends are family time for you and that your kids are probably dying for you to get back to them. And I really appreciate you taking the time, and please tell your family I said thank you. And, you know, we look forward to our listeners getting a lot out of this. Any last comments that you want to leave anybody with?
Mike, I want to thank you again for having me on your show and on the upcoming summit. I'm really excited. I hope your listeners will take advantage and also join us on the summit. And I'm sure they're going to learn a ton, and they will enjoy it a lot. And again, thank you very much. And I wish everyone an amazing time there. And I hope everyone is going to crush it afterwards.
Thank you. Thank you very much. Well, thanks a lot, listeners. I'm glad everybody was here today. I hope that you got something out of this. There's been a lot of good meat this afternoon. So remember, we're here every Tuesday at 12 o'clock. Love for you to plug in, subscribe, and like the page, and just get as much knowledge and education as you possibly can, and find yourself your niche and execute. Look forward to talking to you all soon. Everybody have a great week. Alina, have a great week. Thanks for being here, and look forward to talking to you soon.
Thanks, Mike.